Today I'm going to speak about the oil price, basically about the factors that affect the oil price and that have affected the oil price recently, and also what it means for the Russian oil companies. I think it's needless to say how important the oil price is for the economy in general and for the oil companies themselves. Frankly speaking, I didn't want to bother you that much with the official forecasts of where the oil price should be. Actually, I'm not the commodity research analyst, I'm just equity research analyst who's covering the oil and gas companies. So basically, I'm taking the oil price as a kind of axiom in my models. And I'm not actually, even from the legal perspective, I'm not allowed to give any, to provide any official forecasts. And actually, even if I did, I don't think it would bring much value to you. As illustrated on the chart, on the right chart, on that slide, here we have shown the evolution of consensus that we have taken from Bloomberg against the spot price. So you can see here actually that the analysts have not been particularly, I would say, forward-looking and successful in terms of predicting where the oil price should go. So you can see here that basically what the analysts did, they just followed the performance of the Brent price. So apparently they couldn't bring much value. Of course, I'm not saying that the commodity research analysts are useless and the banks should hire them. Of course not. But it just, I think, these charts just illustrate how increasingly hard it's becoming to forecast the oil price in the current environment. So let me now switch to the key factors that have driven the oil price and continue affecting the oil price dynamics. On the left side, first of all, we see the performance of Brent against the DXY index, which is showing the strengthness or weakness of US dollar against the world currency basket. So you can see that actually since the middle of last year, when we saw the massive fall, massive drop, a collapse in the oil price, there was a pretty perfect correlation between the Brent and US dollar. And actually, that's kind of quite considerable factor that explains why the oil price plunged so much and why it has recovered lately a little bit. The second chart shows where the oil price is in terms of the futures forward curve. If normally, let's say a year ago, the oil market has been in the backwardation situation, which is normally viewed as kind of usual thing for the oil market. Nonetheless, now the oil market is in contango position, which means that it just reflects the continuing and persisting oil supply glut, or just excessive oil supply on the market. Moving ahead with discussing the various factors affecting the oil price, I think here it's now important to switch to the US market, which is becoming increasingly important in terms of playing the role on the supply side. So here we have provided the statistics about the US oil rig count. As you probably have seen, whenever any agencies or analysts discuss the oil price performance, they always mention about non-stop fall in the oil rig count. Indeed, oil rig count fell like a stone over the last, I would say, 9 months. So basically, this is tended to be viewed as a leading indicator of the future oil production in the US. On the second chart, we have analyzed the case in 2008, when we also saw the massive drop in the oil price. Of course, at that time, there have been completely different reasons behind that. But if you can see at the oil price performance against the US total oil rigs, you can see that actually the price has started recovering before the oil rigs reached that trough. So right now we have pretty similar situation when, in fact, we have seen some, some recovery in the oil price after the collapse, but still we see a continuing drop in the oil rig count. Nonetheless, I would like to give a small remark here. I think some analysts just overemphasize the significance of that indicator as a kind of, prediction of the future oil production in the United States. The reason behind that is basically the rigs which have been idled lately, they have been the least efficient ones. It means that actually the rig count cannot be viewed as a kind of reliable leading indicator of future US oil production. In fact, they have idled the least efficient rigs, but the most efficient rigs are still there, meaning that it wouldn't take that long for US oil producers, to get back to the investment activity and continue drilling and just, providing once again an increase in the oil production.